Let's go in chronological order of what's taken place so far this week. We came in on Monday with a bit of a not too much going on. I think everyone was very worried about the presidential debate, and that took place. So let's unpack what took place at the debate. I think my take on it is going to be a little bit different than most people would think, and is probably going to be very different from what the media has been portraying. So during the debate, there was no villainization outside of a couple of really minor comments of any particular business or industry. A little bit with the banks, but there was no real mention of the biotechs. And I think that compounded with the end of quarter. This is the end of the quarter, the third quarter. Markup started in earnest, and we've been rallying ever since. The media has gone on about who they perceived as the winner of the debate. I think that the polls, the online polls, were unanimous that it was Mr. Trump, and the media pundits were fairly unanimous that it was Ms. Clinton. My take on that is this: is if it was Ms. Clinton who was the winner, why is coal continuing to rally? It's been in a steady uptrend for a while, and that to me signals that the market may kind of undercover believe that it's going to be Trump. I don't know, but that's just my take on it. I've been watching coal. It also struck me that biotechs were up a little bit, barely, but they were up a little bit after the debate. And if Ms. Clinton would have been the winner, they should have been monkey hammered, because she's been talking about basically kneecapping those stocks. I will say it's notable, though, that the market was up pretty solidly today and that biotechs were a little bit weak. But again, coal was higher. So I think KOL is more your election gauge. That's basically what I'm using. I don't really want to get too much into the debate itself or my opinions of the candidates, although I think most people know where I lie on that. I tend to be in the more pro-growth, pro-entrepreneurship category as opposed to debt stagnation and entitlements, so we'll leave it at that. With regard to the Fed, there were some Fed comments today by Chair Yellen and a bunch of others, the participants, as she refers to them as. Lackeys is how I refer to them as. Not much there. The Fed just had their minutes, their presser in September, like a week ago. I don't think very much changed. You had some consumer sentiment numbers that have come out that have been okay, and then durable goods was noteworthy that they were expecting a move down, and it actually was flat. I need to go into that number. I didn't have a chance to do it this morning, but that number can be bounced around quite a bit by Boeing and commercial airlines. So I want to take a look at that number, and I'll get into that maybe a little in the weekend review, X the airline. So I want to look into that number a little bit deeper. So that is the kind of the macro backdrop. There's also been some fear going on with regard to Deutsche Bank. You had conflicting comments. Draghi basically said that they didn't think Deutsche Bank was a systemic risk, but then Christine Lagarde came back today saying that she believed it is systemic risk. I come down on the side with Lagarde. I do believe it is a systemic risk, and I highly doubt that Deutsche Bank would be allowed to just kind of go the way of the dodo like Lehman. So that seems very unlikely to me. I do think that there would be some intervention. Lagarde, by the way, and the IMF also today, more noteworthy, came in and downgraded their expectations for U.S. growth. So when she was asked today about what her view is on interest rates, I don't think she needed to say anything. I think the fact that they're downgrading their view of U.S. growth speaks volumes in and to itself. So, yeah, I mean, I think I had done a tweet. I said, Lagarde is about as dovish as a kitten next to a warm bowl of easy money milk. So I just don't see them hiking, the Fed, in terms of hiking rates anytime soon. I know they've said they think November is on the table, but I do not believe that. I think December could be on the table, but really shouldn't be given the data. So I don't want to get back into too much of what I've said in the last couple of videos and repeat myself with regard to macro. A brief summary is that we're still in the same slop here with low growth, cruddy jobs, and a rising threat of structural unemployment from artificial intelligence and automation, which is only going to continue to ramp going forward. I think that they've also given a hat tip and acknowledgement that the Fed is sort of the only game in town, and they know that fiscal and policy is not doing well, and they are kind of the offset to those woes. So now that we've gotten past our veggies, let's get into the meat. What is going on with regard to the stock market? So I've often discussed that there are a few keys to the market, and at any given time, some of them become more prominent than others. The 7 keys are the VIX, the dollar, the bonds, the debt, the high-yield debt, I've been using HYG, oil, China, and biotech. So let's unpack those. The VIX is down, hovering around its lows, so not really a factor here at the moment in terms of price direction, unless that were to start spiking again, and we would know that a pullback would be in earnest. The dollar has remained relatively tame. I've been using the UUP, that's the dollar ETF, and it would help if I could type in a ticker. It is still kind of tucked in into that potential right shoulder here that I've discussed in the weekend review videos. It's making some lower highs and some higher lows, coiled in a range. There should be a break in some way or another, but I've proposed in the past that as long as it's below the 200 MA, there's really nothing to see here. And today is below the, it had a 50 MA test and failure. It's roughly around the 100 MA, chopping around in the lower end of the range. So not much to see with regard to the dollar. The bonds, given post-Fed decision, other than today with a minor reversal basically right in front of the downtrend line, although today did have a 50 MA hold, has done nothing but rally. So rates are going down as the Fed is talking about hiking. So the market is calling bullshit on the Fed hike. That's my interpretation of it. 138.5 is a key number. We had a bit of a look above, and yesterday we closed above. Today was kind of a bit of a reversal. Let's keep it simple. As long as we're above the 50 MA, it's kind of okay. Below gets a little more iffy, and there could be a 100 MA test, but I really don't see rates being an issue. I've often talked about rates dropping being responsible for the markets being higher. The PE multiple premium. That is, that's why the market is as high as it is. Everyone talks about earnings being disappointing and growth being disappointing, but markets have peaked in the past at 6% interest rates, and we can't even get over 2. So, yeah, the market does deserve a PE multiple premium. A lot of companies, as we know, have been issuing debt and refinancing their balance sheets, and they are basically lowering their borrowing cost, which is known as the weighted average cost of capital, thus boosting their share price. I don't want to get too into that. I've discussed it before. If anyone's curious, maybe I'll do a special edition video on that at some point. So that's not really been an issue, although it's been moving in the right direction. Lower yields and bonds kind of just staying sideways or rallying is good for stocks. HYG today, I think, was a 1-2 punch with the oil. Oil is what got the party started a little bit today. You had some OPEC comments that they weren't going to do anything with regard to production this meeting, but in November they're expected to implement price caps. The Iranians have been against this. I'm currently running on a poll on Twitter asking about this. It says, I wrote, will there be an OPEC oil production cut at the November meeting? Yes. Right now we have about 98 votes, although that number should continue to rise. We have 25% thinking there will be, 59% thinking there will not be, and 16% are unsure. I would have to say that I come in the yes, there will likely be some type of action taken camp. And I'll tell you why. I was a little on the fence with that today, thinking they'll probably just jawbone and buy themselves time until November and then not have to do anything, similar as the Fed is. But I'm starting to think that they might, because the day, today, that they said that they're going to do production cuts happened to coincide with the day that the Congress overrode President Obama's veto on families being able to sue the Saudi royal family over 9/11. You have to ask yourself if you believe in coincidences. I do not. And I think that it's a little bit too coincidental. I think either the Saudis are being bullied by lobbyists from the U.S., from the oil industry, the Exxons, the Chevrons. These are multi-billion-dollar corporations who have tremendous influence over the U.S. government, to push the Saudis into production cuts, or the Saudis view it as penalizing the United States by raising the price of energy. It would also, more than hurting the U.S., that would hurt Europe and Asia and probably put pressure on them as well. It also helps Putin. So I do think that there is some action coming from OPEC. I don't know how whopping or overwhelming it'll be, but it seems like something is brewing. China has been benign. BABA, we know, has been rallying, and FXI has been in the kind of upward trajectory. Today it was an up day. It had a little bit of it's had a little bit of topping action, but as long as it's above 37.66 and you have a 50 MA roughly below at 37.10, to me that's okay. Once you start getting below the 50, it starts thinking to me 100 MA, which is in the 35s. But as of now, China either rising, same as bonds, or benign is good for stocks. With regard to BABA, I think that BABA and Amazon and these types of stocks, the momentum stocks, the high growth stocks, have been under accumulation and are being used as instruments for window dressing. I'm going to talk about that in a little bit with Amazon. I do believe as we pull into these 110s, although that's really been kind of where the resistance is in the upper 109s. 110.49 is a measured move. As long as it holds 104, it's quote-unquote okay. Below 104 becomes problems, and I do like booking profits into the 110s. We'll keep it that simple. IBB, kind of consolidating. I don't really know what to make of this just yet. It is actually looking like it's forming the right side of a cup and handle / inverse head and shoulders. As long as this sucker holds over 289.71 in the 50 MA, I think it's okay. Below there gets a little more iffy. We'll keep it simple. Keep it simple. There's a channel test if it were to happen tomorrow, roughly around 285s. But as long as that kind of general area holds, I think it's all right. If this does start rallying, I think you can all but assure yourself a Trump victory, by the way. So that is that. Gilead, they've been a perpetual bow wow. I talked about a trade setup here, either a long over 82.05 in the weekend review or a short below the low, which is 80.66. It looks like the short is in play here. It's now testing the backside of the prior downtrend where it broke out from. So this area here needs to hold. If you lose the 2-day low, I think it's going to go back down and retest the all-time low. If you get back up above the two-day highs, I might consider the pullback a success. So again, 50 MA roughly and 10-day MA. If it can clear that, then I'm thinking back to the upside. That was Gilead. I covered the BABA. Let's talk Apple for a moment. Apple has been acting well. A lot of that, I think, has to do with their iPhone sales and the fact that subsidies are back in no small way. Today was a bit of a look above and fail with regard to the kind of itty-bitty downtrend line that we're in. I'll keep it simple, real simple. As long as this is over the last swing high, the 112.39 to, what was this low? 111.55. It's sort of just chopping and it's okay. If you can get back up over 114.79, that was the kind of reversal dump day where that, what was it, GFK, I think it was, the German sales, I forget what they're like. They measure sales of products, and they came out and said Friday that they thought that Apple was going to miss. As long as you're inside that range, it's sort of a push. Over the 114.79 to me is a long, and then below 111.55 to me would be a short. No, not GlaxoSmithKline. I think it's GFK. Yeah, so that's the story with Apple. Jumping around a little bit here. Amazon. All right, so here's the skinny with Amazon. In the past few weeks in the videos, I've been rather bullish on Amazon, and I said I thought we would see 833.91, which is the 1.618 Fibonacci extension from the 696.44 peak on 12/29 to the 474 low on 2/9. Like I said, the 1.618 Fibonacci extension there takes you up to 833.91. This could overshoot a bit to the 850s maybe, but I'll tell you this has been ramping on window dressing into the end of the quarter. Technically, Friday is the last day of that, although I don't know how much it's enforced these days in the kind of, anything goes type of market we're in these days, but it's illegal to mark up on the day of. So if there's some type of a gap up tomorrow, it's probably a good opportunity to start booking some profits, and you might even want to try a right or right out short coming up for some type of a pullback. These things can sometimes take on a mind of their own, and they can really blow off. I think we're sort of in that going vertical, almost reminiscent of Top Gun type of move. Tesla. So we're in full tech mode here. I think that this is going to be under pressure because of, first of all, Mercedes is unveiling their electric SUV, I believe, tomorrow. And I think that they're under pressure because of the Solar City deal. Elon Musk hinted that they have to do a secondary to fund their deal. So until that closes, I think that the stock is probably going to have a bit of a cap on it. The 200 MA was really where the breakdown point took place in the after hours on their earnings day. That's what held. I would assume that is roughly resistance now, and you have basically a confluence of 100, 50, and 200-day moving averages just above around the 216. So that's sort of your upside potential. I just think this thing is going to be real choppy for a while. Google. So, yeah, so you had an analyst downgrade today. I'm struggling to, for some reason, it's not like a typical one. I'm forgetting the name off of that today. Let me just look that up quickly. Not in Trade Flash, it's in news, right? Live news. So anyway, they were downgraded today. Wedbush. They came out and downgraded Google today. That, in the analyst community and on Wall Street, by the way, downgrading core position type holding stocks on end of quarter week is a big no-no on the street. It's an unspoken rule. I think that analyst is never going to be invited to a party ever again. I think he was looking to make a bit of a name for himself, and I believe has not had the best track record with regard to Google in the past. The stock shrugged it off for the most part today. It was down early. It's been up. I think Google is going higher. I think it wants to see the channel high in the 1.618 fib extension up at 895.44. Yeah, that's where I think we're going. As long as this holds this kind of range, it's consolidation range it's in, the stock looks like it's going higher. You have roughly 2 days here of down moves that were down that resolved up. Let's use those 2 days as the key. Below 801.83, you can try right or right out short. Above 813.49 is a right or right out long. Let's jump back to oil and Exxon. I meant to talk about oil before, but I don't know, got into something else. Oil today broke a secondary downtrend line. We're still within a primary down channel. I like that we're over the 100 MA, and I like that we're over the kind of the last swing high, reversal high of 46.55. Above 46 is the hurt locker for shorts. So anything above 46.55 to me remains to the upside. I think that this could see the channel high at 48, but I think we're eventually going to retest 49s and 50s and maybe even go higher. So I'm thinking long on oil. I like BTD there by the dips. With regard to Exxon, I talked about this in the weekend review, and I've mentioned this in the last few videos, that we were starting to get into levels that I was interested in buying and selling puts into. I happened to get some off below 83. I was really looking to become full size closer to like 80, 81, so that never happened, so at least I'm on base here. The stock now rallied up today. It stopped basically to the tick at the downtrend line. You have 87.44, which is an old key level, and you also have the 50 MA right above it, 87.86. It needs to clear that for more. I think if it does clear that, it would see at least the 100 MA and the 89s. If it stalls here, it could pull back to as much as the 50 MA, which is roughly around, I'm sorry, not the 50, the 200 MA, which is roughly 85.33. Actually, it's exactly 85.33. So I either like it on momentum above the 50 with a close above the 50 for a move to the 100, maybe even higher, or I like it for right or right out tester long on a pullback to the 85.33 200 MA, and if it closes below there, it would be a bit of a GTFO type of a situation, meaning get the F out. This to me was a really big move. You took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of trading in Exxon today with one bar. That's a lot. It's a good amount. The stock, though, is still in a pattern where it's making lower highs and lower lows, and this won't really, truly right the ship until it recaptures over 89.37. That being said, I'm keeping it that simple. Row for a long on the 200, or continue with the channel break and a move over the 50 MA. I happen to already be long. We covered IBB. I covered oil. Let's do Nike quickly. All right, so Nike had a lot of high open interest at the 55 strike. They reported a good quarter. Their future orders were down. I think that they were like 14% the last read, and then 1% growth this read. I'm hoping that this comes down to the channel low. If it were to do it tomorrow, which it will not, it would be in the 48s. This could get as low as maybe the 44s to 47s, in that range. 44.74 would be a 50% fib. I'll keep it like this. As long as you're below, if you're in today's range, there's really not much to do. If you could get above today's high, above 55, then I think the stock is a long, and if it's below 52.80, it remains a short down to me, at least the 51s and potentially the channel low. At that point, though, I want to start getting a long, because I do want to be long this stock into the November auto lace product launch. That is going to be a must-have, and I can't wait to get them myself. They light up, you push a button, they auto lace. It's like the Air Mags from Back to the Future 2, although I think these are going to be like running shoes. I can't wait, by the way, until they make Air Jordans with this auto lace. That thing is going to be nuts. So yeah, that's the story with that. Skechers, someone asked about Skechers. I'm actually long via short puts. I talked about selling them almost near the dead lows. I said that I wanted to start getting along the stock between 2156 and 2078. We got 2090. I can't say I caught the dead low, but I did sell close to it. I sold some out of the money puts, and I'm still using that as a long proxy. I'd love to see a move back up, into like the 24s. So yeah, I think Skechers, they have their earnings coming up. Maybe it continues to rally into that. If you start losing that 2090 area, there's really not that much in terms of support until you get closer to the 14s and like 1497 to 1592. So let's be a little careful. That being said, this has been down a lot. It got the last gap from 2 earnings ago, or the last earnings, sorry, was from 32.18. The stock got down to 20. It's not that expensive anymore. And I do believe Skechers could actually raise their prices a little bit. They're only trading at 13 times earnings. This, to me, would start becoming an interesting takeout target if it starts getting lower, maybe even for private equity. But yeah, that's the story with the Skech. Lululemon, not one I follow often. That was actually one of my stocks of the year in 2015, I believe. This got back up to some very key levels. It's below the 200 here. I would start getting really more interested in this. Let's see. Yesterday you had an excess low. If you can get over the 2-day high, over 64.5, then 64.5 to 64.70, then I think this would be a look below and fail, and you can play it to the long side. But I would actually really get more interested in this somewhere between the 57.91 and 59.67 area. I would be more into it there. So it's either for right or right out long above the 2-day high, or a little lower down there where I'd probably be interested in selling some out of the money puts. So that's the Lu. Going back to the commodities, the gold. 100 MA there was the key. I was having a conversation with someone on Twitter about that. We're roughly holding the channel low here. You're consolidating in this area. You got to watch the dollar with this. If the dollar really starts ramping, gold is going to have problems. This to me just looks like a sideways consolidation, a bit of a bull flag here. If you lose that last swing low, though, which was 124.67, this thing is probably could step on this thing to the short side in size for a right or right out trade. For a move, and my guess would be even down to the 121s. So yeah, that's what I'm thinking. If this can hold here, I would think that this will likely get back up into close to the 130 area. So that's what I'm watching there with gold. That covers the what's this? Wrote down a symbol someone asked about. Someone asked about this MKTX. I have no idea what this stock is. It's not one I really cover. I wrote it down to. I always like looking up stuff that I don't know much about. It's been in an uptrend. The stock is up a lot. It's still in primary and secondary trend lines from what I see here. I can't really speak in too much of an educated fashion with regard to this stock. And I will tell you this. You can't be all things to all people. And I don't know enough about this stock to speak that well about it. I'll just say this. The 50 and the 100 MA look like they've been some support in the past. So as long as you're above the 50 MA, I guess you could kind of still be long. If you start getting below that, and that would be a breach of secondary trend, you wouldn't want to be so long. And then you could start looking at some fibs. I mean, this stock basically moved. This thing has been up ginormous. If you're long, I mean, I would stick with it. I mean, today you're a little below the 10. 50 MA to me is the must hold. Someone asked about EOG. That's one that I posted a photo about. I did a post about it. So EOG pulled back in the dog days of the oil correction in January and got just below the 61.8. It had actually, if you're looking for what a textbook version of a secure low is, take a look at the EOG chart and go back to the 120 low. That is a textbook secure low play. Right now it's just chopping. It roughly has held the 50 MA. Same business here. 50 MA holds, it's higher. Below there, I think the 200 is in play. On the rally back up, just so you know, it also stopped at the 61.8 on the upside, and that was at 95.31. So I like the idea of this being long against the 50 MA and either not long or short below. We'll leave it at that. SPY. Let's end on the SPY. All right, so just want to look at one other indice here. So let's talk about a couple of other things before we do SPY. Qs are still above 118.12, which is good. If you get below the 117.15, you have the 50 MA roughly below there and the 116s. That area needs to hold. If you start getting below there and the 115.70 and all that area, this is going to get real ugly fast. The IWM, by the way, as long as it's above there, it is still going, in my view, higher. Below that area would be a problem. IWM is kind of hanging out. It basically filled the gap today. It's just hanging out. The 50 MA has roughly been the support. I'll just say this: just ride it until it's that's the key. 50 MA. Anything above, I still think is okay. Anything below gets more iffy. The 122.81 was the last kind of pullback swing low. If we were to take that out, particularly now from a lower high, I think the IWM would have some issue. The SPY. So the SPY has been kind of the one lagging a bit. Today we basically, to the tick, I believe, hit the 50 MA and kind of just, did we get it? No, we stopped just shy of it. We are still below the downtrend a bit. I wouldn't be surprised. My theory that I said yesterday was that I thought we would just rally into the end of the quarter, so I'm still thinking higher to maybe the 118, the 218s. If we are going to look at SPY, I always discount when IV is low what the down move would be, that it would probably be more than what's prescribed. But the coming move until Friday expiration is $1.692, 1.692. Like I said, if the move happens to be to the downside, it would probably be more. But another buck or so to fill that gap would not surprise me in the least. I see SPY, if you go back to my weekend review video, I do an in-depth discussion about SPY and the potential setups for SPY that could happen. That will be in the link in the description below. Take a look at that. That really, I did a great job, I think, of defining what the downside potential would be. The upside potential here, the SPY really shouldn't be back in the 216s again. If it's truly bearish. So I think as long as it holds 216 and today's body low, which is, and this is sort of like, I often say I give it a little bit of wiggle room sometimes. 215.84, 85-ish area. As long as that area holds on a pullback, it's kind of like still all right. Below there, to me, is still in this malaise and would go lower. So that area needs to hold, and it needs to punch and hold above the 50 MA. The gap from the day after the Fed, 9/22, was a look above and fail of the 50. We should not be, like I said, should not be back to the 50 again this soon, and I would take a move over the 50 here as being bullish. Below is still iffy-ish. Above would firm more, and I like the idea that we closed into the 216s today. I will warn about this. If we rally hard tomorrow and again hard on Friday, Monday is the start of the new quarter. You may or may not get some follow-through strength then, but it's not a must, and you have to keep in mind This has not been a very good period of time for hedge funds or for mutual funds, and they are in the process of marking up positions. Those will have to be locked in and unloaded, so just be careful. Don't be the ones they unload into. I assure you, you're not the smart money if you're first buying Amazon today after being up $25 in the last 2 days. So look to start selling those names as opposed to initiating new longs. Anyway, that's my story. I'm sticking to it. I hope we had some good analysis here. If you came into this broadcast late and want to watch it again or any of my other broadcasts, it'll be on my YouTube channel shortly. That's Justin Pulitzer Trades. If you like the video, hit the thumbs up. I love comments. You guys and gals help me make my videos better. And if you're not following me on Twitter, my handle is @JustinPulitzer. Anyhow, thank you for your time and trust, and I appreciate it. Let's have a great rest of the week, and cheers.